Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, the 11th of December, 2024, just after 6:30 p.m. Central Time. What an interesting day. You know, we walked in today and you were looking for reports on the CPI. You got it. The report was not a report that said CPI is going down. Opposite. What it said is a core of items were actually still increasing, but at a very, very mild pace. When I say mild, I mean mild. If you were watching Rick Santelli this morning, he described it absolutely perfect when he said it's mild. It's not hot. It's warm. You could use that word. But that I even went one further. And, you know, if you look at Mexican food, mild, hot, which way do you want to go with it? I thought it was very mild. Your rent, which is the shelter, went up 0.2%, all right? Well, 0.23 basis points, let's call it that. And when you look at what that is, remember, shelter makes up 40% of CPI. You then saw used cars went up again. You saw that furnishings and clothing were up. So overall, you were up 0.1 of a point. It's not enough in core and or the headline to make a huge difference, because what the Fed has prepared us for is saying that there's bumps along the road and they believe this is one of the bumps. Labor did not soar, and I think that's good, but I'm also not seeing it collapse, and that's not good. So it's a couple of components there. The market decided, not me, the market decided that this will not take the Fed off path. Coming into the day, you had about an 88-89% chance, if you looked at the CME Fed Watch page, of a December cut. By the end of today, we were 96%. So that's what the market did. You sent the NASDAQ up in the cash over 22,000. You've got the energies that moved higher, not because of the CPI. Tomorrow we end the two-day meeting, or China ends its two-day meeting is the proper grammar, and maybe we get an inkling of what they're going to do to shore up their economy. It appears one of the things they've decided to do is to allow their yuan to fall in value more. So basically, you know, the stretches have been from 7 to 7.2 yuan to the dollar. I think they're going to let it go to 7.5. And as they do that, it's one of the ways they can counter the Trump tariffs, because I don't see Trump and President Xi agreeing on too much right at the beginning. If anything, I think Trump remembers that President Xi did not live up to the deal they made for the amount of grain purchases and the like, just the opposite. So when people tell me, well, they'll get along and they'll make a deal, you're dealing with Trump. This is an elephant. He's got that memory. And it's going to have to be something he believes there's teeth in to enforce it, if they even come to the table. I didn't say that China's coming to the table. So I think there'll be problems. I'm already reading tonight Tesla, Stellantis, Mazda, BYD, one auto manufacturer after another, rethinking their auto plant investment in Mexico because of the tariffs. Mazda's the latest today to say they are seriously rethinking and questioning should they go ahead. There's no certainty, and they don't want to throw good money after bad with Trump in office. If he says no, we're going to put those big tariffs on, because what are they building the car for if they're going to go after the American market? There's other markets, but what are they doing it there for, which is right on the U.S. doorstep? So these are problems that the market will have, and understand them. Tomorrow morning, we're going to get jobless claims. I don't think they're important right now. I think the market's already determined what the Fed is going to do. So on a scale of 1 to 10, I'll give it a 3 in importance for tomorrow. The PPI will be important, all right? The market will get a good idea. Could the Fed go off base and suddenly it becomes questionable again? Well, if you had a crazy number, it could, but I don't think you're going to get that. I think you're going to get a very small increase again, not a decrease. Get a decrease of from what's expected, and then you have a different game. Then the Fed really can go. The EIA natural gas storage should come out, but remember, you got a cold blast that's now in the Midwest. Chicago tonight will be without wind chills about 5 to 8 degrees. With wind chill, you can imagine how cold that's going to be. And as fast as it's here, by the weekend we'll be in near 35, 40 degrees again. But it is here, and that cold will force everybody, heaters on, fireplaces, whatever it is that you're using gas for. So pay attention to that. All righty. Let's take a look. Maybe we should do one other thing before I start talking here, because this is so important. Do remember that tomorrow is the last day that you'll be able to get my metal report. Not metal, my stock index report. I'm thinking metals in my head. The stock index report. This is the report where I talk about the Santa Claus rally. There's really 2 dates for the rally. I explain them. I show you what they've done historically. I go back 50 years, in fact, on one of them, and show you what it's done, the overall percentage, how it does, and where it goes. So pay attention to it. You're not going to get another one of these. I'm not going to keep beating the bush. This is the last Santa Claus rally of the year. It goes off the board tomorrow. You won't be able to see it again. Okay? All right, now let's go back to the chart action that we wanted to. So let me bring it up right through here. And as you take a look at the S&P, you're back up and knocking on the door of all-time high close. This is a chart of closes only. We were unable to get a break to even get back to the 18-week average of closes, and I have my doubts that you're going to immediately. As of, and this is so important, the market was hanging by a thread on the close of business Tuesday. Today's Wednesday. Well, today, the trade date's going to be Thursday, but today is Wednesday. It had to rally hard to save itself. I'll show you this in a minute. It did. You got the big rally out of the market, and now I can see it might have to consolidate. It's got some problems right here with other highs that were right there. The pattern of the chart is back to bullish, higher highs, higher lows, right? You see the higher lows and you've got the higher high. So that's bullish. The market didn't quite get back to the 18-day average of closes where I thought it would have support anyways. You and I had talked about this here. And the resistance I'm looking for is the upper Bollinger Band. And how often have you heard me say, I think you can get to the 61.46 level. What about slow stochastics? Well, this is what I want to show you. Close of business Tuesday, 79.75. If it closes under 79, there'd be a huge problem. Then I think the market's going to continue on and hit that 18-day average before it gets over that high. Instead, what the market did, ready, makes its move, jumps sharply today, finishes with that at an 85 reading, and tonight you're back to 84. Now, one of the things you also want to look at when you get like this are what are the weekly charts doing. And in the morning in my subscriber video, not these videos that you see on YouTube, I review that with the customers because I have my clients long in the S&P if they're in my subscriber service, and it's doing quite well. I've got my clients long QQQ in the ETF service, and they've been in that one for a bit now, and it's doing really well. In the NASDAQ, right back up to the upper Bollinger Band. Isn't it amazing? And I think you got to look at it and say, okay, if the market rallies, where's the resistance? And the one thing I teach is if it keeps going, the first major resistance, since there's no moving averages above it, a Bollinger Band. I also use window envelopes, but I don't show them here. But Bollinger Bands do the job. You tell me where the market went and it just sort of ran into that brick wall. If you don't learn how to use them, you have a problem, in my opinion. The Dow is not the place to be just yet. It is still continuing its correction, as is the Russell. Not participating with what the other markets have done. You're getting rotations back and forth in them. In the 10-year notes, all I'm looking for is a challenge of the 18-day average of closes. Now, the 5-year, the 10-year, and the bonds all lost their embedded reading, and you're hitting targets that I wanted to hit. So I'm happy with what's going on here. Same in through there. So you can see that even with this inflation, it's not as though if you went up, you were losing yield. If anything, yield came back. You're stuck at high interest rates. Have you bothered to take a look at what the 2-year note is doing? You can go out and lock in pretty good rate, but what about the 6-month? What if I tell you don't have to gamble and you can pick up over 4% for 6 months? A lot of traders look at that and they go, wait a second, I want part of my portfolio, it's year end, what are we going to do with that? In the dollar index, I see whipsawing, sideways action. I'd expect that to be the case in front of next week's FOMC meeting where they set the rates. Tomorrow morning, you're going to get the European Central Bank. They'll tell you what they're going to do. There's massive pressure to cut again, at least 25 points, maybe 50. We'll see if the market responds to that. Will it be going back to the lower Bollinger Band? You're going to get the Swiss National Bank tomorrow. You had the Bank of Canada today go 50 basis points. And Brazil surprised everybody. It took the real and went up 100, up, not down. They raised interest rates 100 basis points, and they said there's more of those coming right behind it because they're trying to fight inflation there and give value to the real. Their inflation's getting dangerous again. Lower highs, lower lows, up here overbought. Okay, I can see the resistance, the Bollinger Band, and supports back down here at the 18-day average, sort of waiting. Remember, we have the Bank of England coming next week. Then we look at Bitcoin. Why not keep going? So the support was the 18-day average. It hit it. The trend is up. The resistance is 103,735. I'm still in the bull camp. I'm already reading where traders are coming out predicting in 2025 it'll be 150,000 a coin. Why not? I mean, once these things become momentum trades, they just take on a different life of their own. It has nothing to do with anything other than there's limited value in it and people want it. End of discussion. All right, in the February Brent crude oil, lower low, higher high, I see it churning away and a lot of resistance starting at the 100-day average, 73.17, and countered 73.87. I'm sorry, 73.87 up to the 7400 level, the upper Bollinger Band. So I see a market doing this, waving back and forth. Same thing pretty much here. You're in your resistance of the 100-day average in WTI. Heating oil, clear this high. You've opened the door to end the downtrend. You're right now fighting a battle at the 18-day average. I think that the pros came out of their shorts here. You know, I said that to you. And I think they're looking. And in that gas, I'd like to get a little more of a rally with this winter storm that we're getting, this extreme cold. And it is extreme. And get a little more. I don't think it's going much more than these levels. And at the end of the day, I think there's plenty of natural gas production under DJT, Donald Trump, that we're going to see, and I mean plenty of it. So a reminder to everybody, remember if you want to watch the report that I've done, the Santa Claus, the dates, because they're not traditional, I give you a lot of reason why the two different dates are at work. Take a look at it, iraepstein.com, click there, you can move your cursor to the top up here, and you'll see an icon, give it a click. I'm Ira, I'll catch up with you all in the morning, you take care.